Hello everyone, welcome to Smart Investing. So for today's video, this is going to be the banking services sector. I'm going to choose the next stocks that are on the list for the banking services sector. So I have 3 stocks for you guys today, and let's begin. So the stocks that I have for you guys today are STL, LX, and HWC. So let's begin. Start off with STL. STL, Sterling Bank Corp. So we have that a market cap of 5 billion. Let me start off by saying that today is October 27th, just to make sure. So October 27th, Friday. Markets are closed. It is 10:47 p.m., not a.m. So we have here market cap of 5 billion. Then the share price is at 26.29. Then let's look at the first page here. Let's see what we have. So we have here the ratio slightly undervalued. Then we have dividend yield pretty low. What do I have to work with? 52-week high of 30, 52-week low of 18, barely a $10 difference. Earnings are 2. They do pay a dividend of 28 cents a year, so basically 7 cents each quarter. Horrible. What else can I say? I don't see any volume at all or high of low of the day, so this stock may be inactive. Oh, let me just excuse me for a second while I adjust myself a little bit. I'm a little uncomfortable, but I have to manage. So anyhow, moving on to the chart. We have a chart here for the 5-year. You can see it's been going up, obviously, ever since 2020. Hasn't gone back down, so I give that some credit. Got to give it some credit. A lot of other banks, they've been going to lower lows, and this one hasn't broken to lower lows yet. It's been still holding up, steadily holding up. So anyhow, for the charting, it looks okay, but for the fundamentals, we're gonna see what's going on with that. Quant ratings, it's not showing me anything at all. This is pretty concerning. I have no technical analysis, so this is showing me that it's very inactive. We have here all these earnings. So we have a beat, met expectations, miss, and it beat that one. So 3 hits and a miss, pretty good. But other than that, we wanna still, we still want to look at the company and see what's it about. And we have here, we don't even have 2022 reports. All I have is 2021. Let me look at other factors and see nothing for 2022. So this stock seems to be inactive. Really big sign that it is not even remotely interested for anyone. So net income, net revenue. I could be wrong. Maybe it just hasn't been updated, but again, this stock is not even mentioned or liked at all based off of the info that I see and have. Now, cash flow, want to see that. Their debt is actually not too bad compared to other people at 83.5%. Cash flow, we have 391 million. Then we have, okay. Oh, they messed it up with the financing. It pretty much broke even on cash flow. So this stock, awful. They broke even on cash flow. They have work to do on their cash flow. Nobody's even remotely interested in this stock. I see no volume. Just a typical stock. Definitely not even good at all. Not it's not even no interest whatsoever for income portfolio. Put it that way. I'm surprised that uh, there's still positive earnings, and I've yet to see a bank that has negative earnings. I don't know how, and I don't know why. It's just it's just hard to believe, really, really hard to believe. No banks are having negative earnings. I think the only way that actually happens is if they get delisted. So if that is happening, that means for that category and that, you know, factor or factors are coming into play, then, negative impacts when it comes to the banking sector, that means it is taken noticeably, meaning the impact is faster and it's not really lagging as much as other sectors, which is a good thing, because that way you can see more fairness and you can actually see the implementation that is being taken place, and then you can actually say to yourself, well, okay, this stock is garbage. Why are they still in business? And lo and behold, um, everything collapses, and then it just takes place as it should be. There's no delays or no excuses or no um, extensions or whatever. None of that. So next one up is ticker symbol LX. I'm sorry, I'm still just very uncomfortable. I just don't like this chair. Doing this at work, mind you. So about to leave soon, but hey, I'm here, right? So $1.83. So volume is at 387K. Market cap at 298. Let me move these categories here. So we have that, and then let's look at that first page there. So we have there a dividend yield of 6%. A lot of people see that. Oh wow, it's nice, but look what you're getting paid. 11 cents. So basically 3 cents. 3 cents a quarter. Horrible. Earnings per share. That's the first time I think I've seen a banking stock that is less than $1 of earnings per share. PE is awful at 1.6. So these are bargain basement prices, but at what cost? At what risk? At what value? Not even worth it. Looking at the 1 year. Went up, shot up, then pretty much stayed flat throughout this whole year for 2023. Most of it. Looking at the 5 year has downtrending. So not good news. Not good news. Awful for the technicals. Analysis. Of course, buy ratings. Value obviously is high. And that is the highest rating that I have. So, moving on to the financials. We have here key indicators. We have, let's look at the annual, which I like to see. ROA at a little over 3.5%, or close, yeah, a little over 3.5%. Then we have ROE at 10%. Earnings. Those earnings, look at that. So we went from 10 to 12, then dropped like drastically all the way to 2. Then to go up again. And then to drop. Unbelievable. Unbelievable. So that means in 2020, they're already feeling the pain from 2020 because of that shakeout from the market. And obviously tech took advantage of that, and they got the money for their stocks. So net income, then we have revenue, close to 10 billion. Then we have 825 million. 340, sorry, 334 for operating. 325. So we have 62%. Very, very low. That's for a bank. I don't think this is a bank. Yeah, consumer lending. That makes more sense because 62% for a bank. Yeah, that's unheard of. So they do consumer lending. Uh, Again, I've said this in my previous videos. With the banking services, they have several categories where they can service you. When it's consumer lending, all they're doing is strictly lending, meaning they just want to loan you money, and that's it at a certain interest rate. That's pretty much it. So their services are extremely limited. Cash flow, the main factor here. What do we have? 98 million. So 2.41. So yeah, negative 1 billion in cash flow. I don't think so. I do not think so. I see the stock getting delisted pretty soon. Awful stock. And we're gonna move on to the next one. HWC. So HWC, last 5 years. So it went up, now it went down, went up here, and then it went started to go down again. Pretty much remained flat from 3 years ago. Wow, time flies. I feel like 2020 was just like a few months ago, you know? I could just recall that moment so exact and so accurate because the way the market dropped and then for it to recover, it was just I had a lot going on through to that time. But yeah. We have this HWC Hancock Whitney Corporation. So the market cap of close to 3 billion. Volume is at 617. So earnings per share pretty strong at 6. Dividend at 1.2. Okay, a little something something. So let's look at the 1 year. It's been dropping down. Definitely not a good sign. So technicals failed, and we're gonna look at dividends real quick. They're stable with dividends. They don't give raises too often, but we'll see how this works fundamentally. We just need some accurate reports from 2022. We have here 1.46% in 2022 for their return on assets. Really high on return on equity, really high. So earnings about the same from last year. Well, sorry. Last year would be 2021. Margins about the same. Those are pretty strong margins for a bank. And we have the debt limit here at 90%. And we're going to move on to the net income and then revenue. So 524 million. So now cash flow, you want to see. So 134. 134. So we have 84. 84. So 9 plus 6, 9. So 15. They are barely cash flow positive. Barely cash flow positive. So they have 250 million plus in cash flow. So that's a good sign. But again, the technicals failed through this kind of environment on the stock market. So sorry, even though Wall Street likes it, their earnings have been coming down slowly, as well as those technicals, you know. So I'm gonna say no. You can find better options out there or equivalency for these stocks. So there you have it. None of these stocks made it to a watch list. Thank you guys for watching, and I hope you enjoyed the video, and I'll see you guys in the next one. Stay tuned for the shorter version. I know you guys like the shorter ones more, but apparently if you want to learn more and have more, and especially uh, use knowledge for your advantage, uh, you guys are always welcome and willing to look at my longer videos. Again, I also recommend when you watch those longer videos, if you would like to, speed it up to a speed of 1.25 or 1.5. So that way I won't waste too much of your time. So thank you guys for watching, and I'll see you guys again.